Hi, everyone. I'm Blaine Birch, co-founder and CEO at Dryrun. And joining me today, another conversation with Melissa Diaz from High Rock Accounting. And we always love to catch up and talk about some of the things that are burning in the industry and what's going on today. So thanks for joining me, Melissa.
Yeah, absolutely. I am really excited we got to touch base today because there's some cool new features in Dryrun that we really or recently noticed, and thought maybe you could give us kind of the high level of the new and cool improvements that Dryrun's been working on.
Yeah, so I know we've talked with some of your team about Dryrun, but we actually rolled out a new build of Dryrun in June. So it's really quite recent.
Brand new.
Uh,
So
Brand new.
exciting.
It's got some really cool stuff under the hood for big accounts, because a lot of the customers we deal with are multi-million dollar businesses. 92% increase in speed, so that's really cool.
Very nice.
New visualizations, budget to actuals, that sort of thing. Fast, simple. We still go down to the foundation. We didn't make it complicated. It's number one, how long is your cash going to last? Number two, who owes you money and who can you collect on this week? And then number three, let's start figuring out how we're going to make you more money and more profitable this year. And actually, before we got onto this, I was just sort of talking about an algorithm we ran in Dryrun, which I found really interesting. And we wanted something that was really actionable, not just a KPI or data point, but something that you can imagine. And so what we did is we just kind of wrote a little algorithm and said, okay, what if you took your below average months up to average? That's it. How much more money would you make? And we found on average, and it actually blew us away, 21%.
And that's huge. That's huge.
Enormous. And the amazing thing is that 21% is almost all profit too, because usually where it's lost when it's below average is it's actually months where you're burning cash because you're below your break-even point. And the only way to address that is to see it coming ahead of time so you can start to negotiate, move start dates around, and most importantly, ramp up sales to fill those low periods. And so that's one of the things we do in Dryrun, and we'll actually start, you can model this out in Dryrun in a couple minutes. We'll build it in automatically at some point because it has so much impact for people to see that kind of information. So something
that's hugely valuable. Yeah, even to a company like High Rock, we can get a little lazy sometimes at rescoping some of our engagements, because if we're in a comfortable cash flow position, there's maybe not that push to do it. But if we see those things coming and we can see how much more revenue it would bring just to do those rescopings that we know need to happen anyway, really gives us a lot of motivation to push our team to be more aggressive with that. So wildly useful information as a business owner.
Yeah, I learned this the hard way back in my creative agency days, and realized at one point how much money I had left on the table by building forecasts and going, oh shoot, that's not so good. those down months, like the high months, you think it's never going to end, so you're not, you just go, and then suddenly it's all hands on deck trying to sell because you're in a slump, and team is sitting idle, which is a whole other set of issues that you want to keep people motivated and driven and all of that. And so something that we really like to focus on in Dryrun is how do we make more money for you? It's not just about cash flow. It's how do you generate that cash that's going to come in the door and make sure that you're growing.
Absolutely.
So what's top of mind for you?
As with anything, I focus heavily on the cannabis industry. And it really is all about cash flow right now. There's a lot of acquisitions going on, a lot of distressed asset sales. So twofold, really important to have that cash flow so that if you are in a good position to take advantage of some of these, underpriced assets, by all means, man, it's the time to do it. And on the flip side, interestingly, I was in a meeting with the CEO of one of the largest publicly traded MSOs just a few months ago. And I had asked him, what are you doing to support your ventures right now, the ones that they had invested in that were struggling? And he said, to be quite frank, we're telling them to survive. Yeah. So even the big guys that normally would be reinfusing cash into these ventures, they're not doing it right now. They're hoarding their cash because they see what's going on, and they see that there's still going to be some trouble in the industry for the next, potentially year or so before we bounce back. And so, knowing that that's the nature of the industry right now, we're really telling our clients in that space to focus on cash flow. I think tech companies are the other one that really need to focus on cash flow now. I think there were years and years and years and years of time when all this investment would come into the tech industry, and we've seen a lot of failures actually in the tech industry in the last few years. And so that capital is really starting to come back. So blue skies are great and we love to project with optimism, but we also have to be realistic that cash flow is key anymore. And that's what's going to make you more attractive as a company, not just revenue growth.
Yeah, it's amazing how the message is flipped. And I was talking with an investment advisor earlier this week that I've known for a long time, and he said they're down 70%. This is about the least amount of money coming into the industry in, I can't remember, he said 20 or 30 years. And if you don't have legit AI attached to what you're doing, it's even less interesting. And so that's kind of a scary part, is there's a lot of really solid, good businesses out there that now they've just been told, yeah, get in the black.
Yeah.
Okay, well, now that the industry, business is tough, inflation's up, all of these, but talk of recession, just get in the black. That's a tricky thing to do. So it's and the only way to do it is know where you're at and what you can do, and hang on as long as you can. And it's a real challenge for businesses out there right now.
Yeah, absolutely. But tools like Dryrun really help. And I think all companies should be focusing on cash flow modeling and making sure they're really planning ahead, because we're going to have some tough times for the foreseeable future. And the sooner you acknowledge that and start preparing for it, the better you're gonna survive.
Yeah, absolutely. And make sure that you have an expert like you guys helping. Not
and
just
great tools like Dryrun.
Yeah, that's what we work
Make
really
it
well
easy on
together for a
yourself.
reason. Yeah, exactly.
Absolutely.
So I think we're coming up on time here, but would love to hear, how can people get hold of you so that they can get some help from you on making sure they stay in the black?
Absolutely. So definitely come to our website at highrock.co. You can get all the information there as to what industries we serve and what our specialties are. You can also reach out to our team at contact@highrock.co.
Terrific. And again, if you're looking for a way to forecast your cash flow, also your sales pipeline, because that sales is what turns into cash, and see some of the lumpiness is happening, the money you're leaving on the table, come and visit us at dryrun.com. We'd love to help you get started.